G'day guys, Joel Seach here, Principal Advisor, Harpel Financial Group. Hope this video update finds you well wherever you may be watching it from, and you're keeping hopefully dry because it's been a bit of water around of late, and if you've got the long weekend coming up, to enjoy that as well, and I hope you managed to pick a winner. Essentially today is just a quick update in regards to the recent federal budget update that came out the other night. Essentially just covering off, I guess, in the main areas, and it was a largely uneventful budget. There wasn't too much to cover, which is probably not a bad thing. I guess in terms of the recent market movements that we've seen of late and the volatility that's occurred, and especially from the UK a few weeks ago, where the government and their Reserve Bank in the UK were sort of at loggerheads in terms of what the government was trying to implement, and then what the actual the Reserve Bank in the UK was trying to do were at different levels, and that caused a lot of inflationary pressure and a lot of issue in the UK pension market. So essentially, the volatility that's been caused recently, and largely with the inflation measures and interest rate increases that have been going on, we didn't want to see the same thing occur here with this budget update. So the government's done well in terms of being able to minimise the spend, but spend in areas that are going to be fiscally sensible and not add to inflationary pressures that we're already feeling at the moment. So in terms of the market side of things, the market was largely, I guess, positive from what the government came out with the other night at the federal budget in terms of what they feel would be going ahead for the next coming 12 months. There'll be another budget announced in May of 2023, which may have a little bit more information come out. I guess in terms of the market of late, as I mentioned before, the last couple of weeks have seen a little bit of a rebound from a lot of the volatility that we've seen recently from the UK. The US is still seeing large inflation. However, they have talked about potentially easing off on the hawkishness of their interest rate tightening to make it a bit more moderate. The RBA, I guess more locally in Australia, we've seen the interest rates increase by 25 basis points last month. And I think the large prediction is to be another 25 basis point rise, most likely, with our inflation numbers still creeping up slightly with the CPI data that came out yesterday. What does that mean for companies and market returns? Well, it just essentially means that higher interest rates means it's a little bit of a tougher growth environment for shares and stocks and property. So essentially, it just moderates growth, but they don't want to see inflation get out of hand. As I've mentioned in previous market updates, when inflation gets out of hand, it essentially puts pressure across the board, and inflation can then become ingrained, which is what the government and the RBA don't want to see have happen. So the RBA and the government, yes, they're two separate entities or two separate independent departments, but they both have a similar principle in this regard, which is great. So in terms of the federal budget update, personal taxations, there hasn't been any changes to some tax cuts that were coming into play from the last budget. They'll actually take effect not until 2024, which is a good thing because inflation should hopefully have largely subsided by then. So those implementations won't have an impact to the inflation pressure at the moment. And then the no extension of the low and middle income tax offset, which ended on the 30th of June 2022. There's been a bit of housing affordability measure. So the key focus of the budget was to make sure housing affordability was there, and a commitment for Help to Buy scheme. So we'll see more information that comes out about how that will work, and a regional first home buyer deposit scheme. Superannuation, there weren't any major changes. Probably one of the bigger changes which we expected to have occur is the downsizer eligibility contribution. So previously the age was 60, and they're looking to lower that now to 55. And this measure should take effect from the first quarter of 2023. So from 50, 55 and up, if a person was to downsize their property, they've got the ability to make an additional large contribution to super of $300,000 per person if the criteria is met. Social Security, there was a few changes to childcare subsidies and parental leave. I guess in terms of the retiree area, one of the changes was there was a change in terms of the former house proceeds being extended, where it's an asset test exempt for the principal place of residence from 12 to 24 months, where that portion that was going to go for a new principal place of residence is exempt, and it's just deemed at 25 basis points per annum, which is the lower end of the deeming rate. One of the good changes which came across the desk was an interesting one that I feel has been a good thing will be a good thing for the economy, is the work bonus deposit for older Australians. So those of pension age and above that are still working either casually or on a part-time basis have the ability to participate and do a bit more without having to impact their age pension, because the work bonus typically gives someone $300 per fortnight of income earned of self-employment or employment as an exemption, but they're adding a one-off credit of $4,000 into that work bonus income bank. So it adds to that already around $8,000 mark, they're adding another $4,000, which in the current environment, where it's been a bit more challenging for businesses and employers to get staff, it just enables the older Australians that are happy to work and maybe do it for a short period of time without impacting their age pension. They can pick up a little bit of that slack in the tough economy. And the increased income thresholds was another one for the Commonwealth Seniors Healthcare Card. So the government's committed to increase the income thresholds for the Seniors Healthcare Card to $90,000 for singles and $144,000 combined for couples. So it'll mean a large portion of Australians, even though they're asset tested at potentially of age pension, they'll be able to fall into the income test for the healthcare cards and potentially be eligible for that. So seek personal advice regarding that, or if you have any questions in that regard. And the deeming rate free. So the government's intended to retain the lower deeming rate, which is the current assessment for age pension, until at least 30th June of 2024. So that's just an overview in terms of the federal budget. They're sort of, I guess, inevitably seeing, a calmness in terms of not delivering too much, delivering money to the right area, and they've sort of updated in terms of the budget deficit, expecting to be a little bit of an improvement over the coming year, but the growth will remain subdued, and we'll see whether or not we fall into recession. They're seeing the inflation will peak at the end of this year and slowly start to come off over the coming 2 financial years, and they're hoping it gets back into the range of the RBA's range of 2 to 3%. The government's hoping it gets back there by 2024-25. The RBA is potentially a little bit further out. So we'll see how that unfolds at the moment. There's so many different factors that come into play. So that'll take place as the RBA gets their rates up. We feel like the RBA will probably get up to around the 3.6% of their rates. It's currently at 2.6%, which will hopefully slow down that inflation. And then you'll have a bunch of people that fixed their loans during the last, the COVID downturn where rates came down. A lot of people fixed their loans. Those fixed loans will be coming due towards the end of this year, and they'll come through in staggered portions in the next year. So that will also add to people that had a fixed loan where their repayments were fixed at a certain lower rate. They'll come off and go to variable, which will mean there'll be less surplus cash floating in the economy, which will also help with the inflation. So I think the RBA is hoping that that'll also help add to decreasing that inflationary pressure. So a bit in this one, a bit of an update in terms of both from a market perspective, but also a federal budget perspective. So hoping that gives just a high-level overview of what's going on. Volatility will be here for a little while. We're seeing it up and down, and it changes every week at the moment, but it's really that long-term journey that we're having where we make the smart decisions over the longer term. If you've got any questions, as always, feel free to reach out. Don't hesitate to give us a call or shoot us an email. We're always here to help answer any questions you may have. And hopefully you've found this budget update insightful and market update insightful. Take care. Enjoy the long weekend if you have one, as I mentioned, and hope you manage to pick a winner. Cheers, guys. Take care.